2015, the commercial real estate market peaked. That was December 2015. That was kind of the top that we were at. About maybe a couple months after that, everyone started realizing it's kind of, we're cresting a little bit. It's kind of going down. Now, I believe they're trying to resuscitate it a little bit, but it's still gonna dip down a little bit more. So if you're noticing Walgreens, GNC, Pizza Hut, there's a lot of these store closures. What's scary about this is people work at these retail locations. Now, if you have a job there and you lose that job, you're gonna have a tougher time to make your mortgage payment, make your car payments, whatever, so on and so forth. Then the other problem is for the owner of the building. It's vacant. So now that it's vacant, how is that owner going to recoup a lot of that money? He's gonna have a tough time, and he's gonna need professionals or someone with connections to try to fill in that space. Because if it goes vacant for too long, he's gonna have a tough time making that mortgage payment, so on and so forth. So what's gonna happen now, probably towards the end of this year, and you'll start seeing it in September, rates are gonna have to start coming down a little bit because we gotta keep the economy up somehow. So as rates start going down, the values are actually gonna be going up because people can afford more property. Here's the problem with that. If those owners have not refinanced, or maybe they're not able to because the bank doesn't see that property as 80% being 80% stable, now they're kind of in a pickle because you've got a property you could potentially refinance, but the bank doesn't want to take a risk on you because you're almost half empty, half vacant. Some of these stores, let's say it was Toys R Us this year, Walgreens, these guys occupy a lot of space. So the owner is then forced to do one of two things. He's got to sell and get out quickly, or he's going to have to let this thing ride and get foreclosed on in a matter of time. When those properties get foreclosed on, most of the time, these investors have already made their money through CMBS debt and those kinds of other ways they finance the property. Now, if they're going to let the property go and they give the bank the keys and they say, hey, here you go, I don't want anything to do with this property anymore. The banks can only hold on to the property for so long because they don't built out to have a management company take care of these things. They're not designed to take care of these things. So what's going to happen is an investment company or an investor or someone else is going to have to buy these things at a discount. Right now, Berkshire Hathaway, for example, has $200 billion in cash, which is some kind of record. The reason they have all this cash is because they know there's no buying opportunities at the moment. Everything's overpriced. Assets are inflated. Everything is way too high. So what's going to happen is you're going to start seeing these deflate a little bit. They're going to have to start coming down. And the banks are really hemorrhaging money. A lot of banks are having a tough time right now. The way they're going to recoup their funds is by raising the interest. They're going to need those interest rates raised. Here's your issue. If you're raising rates, you're hurting everybody else, but you have to protect the banks because they're the ones lending everybody everything. So you're going to see the same type of problem. It's going to happen. It's just going to happen in various stages. So I think in the next 6 months, we have about 4 to 6 months before things really start falling apart. And not falling apart in a terrible way, just falling apart as in their sellers are going to have to start discounting and lowering everything and reducing everything. Commercial real estate is done usually in 3, 5, or 7 year terms. So if you've had your property for 5 years, maybe 7 years, and you cannot refinance, your payment is just going to shoot up depending on what kind of term you have, a balloon payment, whatever those terms you've worked out, you're going to be in a tough spot. So you're almost going to be forced to sell or figure out another way to get out of that property and figure out what other terms you can use.